Thanks for tuning in to this week's news recap. Bitcoin dropped to 42K. Here are 2 reasons why. Bitcoin fell by roughly 10% on Wednesday, dropping from a high of just over $47,000 to below $42,500, before settling in around the mid-43,000s for the rest of the week. The crash led to $322.86 million in Bitcoin liquidations between Wednesday and Thursday afternoon, the largest such liquidation event by over $100 million since December 3rd, when over $615 million was washed away in 24 hours. The slump coincided with 2 negative events for Bitcoin. First, the network's hash rate, or the amount of computing power securing it, took a hit on Wednesday when Kazakhstan shut down internet access across the country due to unrest over spiking energy prices. According to Cambridge Center for Alternative Finance, as of July 2021, Kazakhstan accounted for roughly 18.1% of mining power in the world. With the internet off in Kazakhstan, data compiled by the block's Larry Cermak shows that Bitcoin's hash rate fell approximately 12% after Kazakhstan's internet went down. Data from BTC.com shows similar results, with major pools like F2 Pool, Ant Pool, and Via BTC each losing hash rate between 12 to 19%. As of recording time, it remains unclear when or if Kazakhstan's internet access will return. The second negative event for Bitcoin was that on January 4th, Bitcoin's dominance, a statistic that tracks Bitcoin's market share compared to the entire crypto industry, reached 39.38%, marking just a 3 percentage point difference between the all-time low of BTC dominance that occurred back in early 2018. With Bitcoin's latest dip, Ethereum is roughly 50% away from flippening BTC as the largest crypto asset on the market. Despite the bearish outlook for Bitcoin in terms of liquidations, hash rate, and dominance, not every headline was negative. A recent Goldman Sachs client note, dated January 4th, expressed optimism for the largest cryptocurrency and cited the possibility that Bitcoin could hit $100,000 if it were to command a healthy percentage of the store of value market. The Goldman Sachs note comes just after the firm reported that BTC was among the best performing assets of 2021. Speaking of Bitcoin, the block reports that a Congressional Subcommittee is preparing a hearing on Bitcoin's environmental impact. The block cites 3 sources with knowledge of the matter, who say that the Oversight and Investigation Subcommittee of the House Energy and Commerce Committee is starting to build a group of witnesses to speak on the energy usage of proof-of-work crypto validation. Cryptocrime hit an all-time high in 2021. According to Chainalysis, a leading blockchain analytics firm, Cryptocrime spiked to an all-time high of $14 billion in 2021. This is a 79% increase upon 2020, when only $7.8 billion worth of transactions were deemed illicit. However, as Chainalysis is careful to point out, an all-time high in crime value is a bit of a misnomer. Crucially, Chainalysis reports that total cryptocurrency transaction volume grew by 567% in the last year, while illicit transactions only grew by 79%. This discrepancy in growth led to an all-time low of 0.15% of all cryptocurrency transactions deemed illicit. In years past, this number has been between 0.62 and 3.37%. The CFTC brings enforcement action against Polymarket. On January 3rd, the Commodities Futures Trading Commission announced a settlement with Polymarket, a DeFi predictions protocol and Disclosure, a previous sponsor of my shows, and ordered them to pay a $1.4 million penalty. Polymarket is a predictions market built on Polygon that allows users to bet yes or no on certain events via smart contracts using USDC. According to the CFTC, Polymarket has run over 900 such events since its inception, including markets on whether Donald Trump would be elected president in 2020 or whether ETH would be over $2,500 by July 2021. In its order, the CFTC said that Polymarket offered, quote, off-exchange event-based binary options contracts while failing to obtain designation as a designated contract market or DCM, or registration as a swap execution facility. In addition to the fine, Polymarket will also begin to wind down non-compliant operations by late January. Collins Belton, founding partner at Brookwood PC, called the CFTC order the most relevant and telling regulatory actions for DeFi founders and investors yet. Belton says the order is significant because it highlights the importance of having a decentralized front end. Wrote Belton, CFTC highlights how Polymarket users are functionally entirely dependent on their front end to access the smart contracts, despite non-custodial wallets. He added, if your front end is the only means of accessing your platform, regulators have a strong incentive to bring you under their regulatory ambit. OpenSea is worth more than a quarter of eBay. OpenSea, the largest NFT marketplace by volume by a factor of 3.7, announced a Series C funding round of $300 million, valuing the company at $13.3 billion. Coatue and Paradigm led the latest round. The announcement comes roughly 6 months after OpenSea's Series B, which valued the company at $1.5 billion, meaning OpenSea's value increased 9 times in less than a year. In addition, OpenSea is in talks to acquire Dharma, a digital wallet provider, in an all-stock deal worth between $110 million and $130 million, according to Axios. OpenSea's busy week comes as the marketplace's sales are booming. For example, daily NFT sales volume across all NFT marketplaces crossed $200 million, only 10 times in history. Data from Richard Chen's Dune Analytics page shows that OpenSea breached $200 million 4 times in a row this week. Speaking of NFT sales, the Bored Ape Yacht Club project had an incredibly noteworthy week. Data from CryptoSlam, an NFT data provider that raised $9 million this week in a seed round backed by Mark Cuban and Animoca, shows that this week, the Bored Ape Yacht Club became the 4th NFT collection to generate $1 billion in sales. Even more impressively, Bored Ape Yacht Club and Mutant Ape Yacht Club, a derivative of the Bored Ape collection, accounted for roughly 20% of all NFT sales over the past 7 days, while no other project even crossed 6%. The massive spike in BAYC NFTs occurred during a week when the NFT project generated a number of headlines. For example, the rapper Eminem became a Bored Ape holder, or hodler, a rare serum which essentially acts as an upgrade for a BAYC NFT sold for $5.8 million in ETH. And lastly, $1.9 million worth of Bored Ape NFTs were frozen on OpenSea after an owner had his private keys stolen, which garnered quite a few memes on Twitter. 30 institutions ask permission to enter the DeFi space. On Wednesday, 30 institutions, including CoinShares, Celsius, and Wintermute, were granted access to Aave Arc, a permissioned deployment of Aave 2. Aave Arc was first announced back in June of 2021 by Aave founder Stani Kulechov. Aave Arc allows institutional players to join the crypto fray, where yields range from 0.01% to 8.66% annual percentage yield on digital asset deposits, a far cry from the yield found in the traditional financial world. DeFi represents a powerful wave of financial innovation, including transparency, liquidity, and programmability, and it's been inaccessible to traditional financial institutions for far too long, said Stani Kulechov, founder and CEO of Aave. The launch of Aave Arc allows these institutions to participate in DeFi in a compliant way for the very first time. Each Aave Arc participant must be whitelisted by Fireblocks, a New York-based crypto custodian, which will require entities to undergo rigorous customer identification processes that will be run per FATF guidelines, or Financial Action Task Force guidelines. Fireblocks was approved by the community in November and is the only entity that can whitelist new entities for entry into Aave Arc. More whitelisters should be coming, as evidenced by SEBA, a Swiss bank, recently proposing itself for a whitelister role via Aave's governance forum. Speaking of Aave, founder Stani Kulechov said the DeFi protocol is developing a mobile wallet. Samsung has entered the Metaverse. Samsung Electronics announced on Sunday that its latest iteration of TVs would offer customers direct integration with NFTs, where users can discover, purchase, and trade digital art through the micro-LED, Neo QLED, and the Frame TVs. On Thursday, Samsung took an even larger step into the world of Web3. The electronics company announced that it is opening a flagship store called 837X in Decentraland. Time for fun bits. LinksDAO wants to buy a golf course. LinksDAO successfully sold out a collection of NFTs this week, raising $10.5 million for the express purpose of buying a golf course. Much like Constitution DAO launched its governance token, a LinksDAO token, dubbed Links, is soon to come, according to Mike Judas, a founder of the block and LinksDAO project lead. The NFT sale saw 2 tiers of NFTs sold: Leisure Membership and Global Membership. Leisure Membership NFT left holders with perks like the right to purchase a membership at the first physical LinksDAO club, discounts on tea times, and Discord access. Global memberships received all the same benefits, plus the right to an extra membership and extra governance rights. Thanks so much for joining us today. To learn more about Maria, Electric Capital, and their developer report, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Anthony Yoon, Daniel Ness, Mark Murdoch, and Shashank Venkat. Thanks for listening.